Alright, what's up, everybody? It's Ted here with some bodies and wicks, and we're gonna go the same thing as always do. It's been about a week, I think, since I brought you guys a video, and we're gonna do some more Ethereum, Bitcoin, and of course Monero. Those are the three I think are the most important, and the three that are gonna give us, uh, well, me the most profits, that's for sure, and you possibly, depending on how you play your cards. So we shall see what happened this past week and what is possibly going to happen this coming weeks. Now that it is the weekend, hang tight. We'll be right back. Alright, so that was a quick opening, and before we get anything, this is all about smart money. And if you don't know what smart money is all about the people who have all the money and the means to control the charts. Um, so if you are one of those people that are a retail trader and that you follow all the retail rules, you most likely get burned a lot, especially if you follow them to the T. I know I did whenever I was trading retail. Then I found this amazing trader, and I took a mentorship through him. His name was Inner Circle Trader, but he taught on Forex and he taught on the equities indices, right, and the futures indices. So I'm taking those principles, those ideas, and I'm bringing them over to crypto. And so far, they have been working for me. They've been working quite well. There have been a couple times, and I have been absolutely wrong, and I have admitted it. But the ideas were still there. I just missed a couple things. That was all. And whenever I look back on it, I go, oh, now I see what I missed. So, uh, and to give you kind of more of like a sarcastic idea of how smart money works, here's a little short clip.
Interestingly enough, that high runs at the bottom of this monthly fair value gap. Interesting. How interesting of that. Huh, it's like they almost planned it. Oh, and look at this one too. All runs at the bottom of this crazy fair value gap. Huh, it's
Okay, I think that was it. I don't know if I went over or not. I really couldn't hear anything. But yeah, so that's pretty much the idea of it. If, if you are confused and you really don't understand how to read price action, right? And you're looking at this and you're still doing your trend lines and you're still in your bulb flags and your bear flags, and you're doing everything that you're supposed to do that they teach you to do, and you're still not making money and you're wondering why, then this is the channel for you. Okay, I'm going to be teaching you some unorthodox tricks and things and like that. So if you could please give this thing a like, and also share it. Share it with your friends. I mean, share it, and I mean, share it with your friends who also want to know what's going on. And then subscribe. Why not just subscribe? Because I'll be throwing out some more stuff out there. I mean, so uh, it'll be good for you to keep updated. Like I try to throw at least one video a week. I was trying to do a little bit more than that, but my job right now is a little bit too demanding. So I'm just trying to do like a once a week thing with my three pillars, I guess you could say: Ethereum, Bitcoin, and Monero, and try to give you like a breakdown of what's going on with those three. Um, so let me see here. Uh, Without further ado, I guess I should say we should head over to the first, and I'm gonna head to Ethereum first. Okay. All right. So here we are. Here is Ethereum. Now, I do have this on a 4 hour time frame, and I like the 4 hour time frame because it gives you an idea of, kind of a larger picture, but it doesn't break it down too small either. Um, Now, I could do daily and weekly and kind of give you some ideas, but 4 hour you can kind of go back and possibly see what happened earlier a couple of years ago, things like that. As you can see, right here is a monthly fair value gap, right? So what a monthly fair value gap is if we actually bring this down to the monthly, is that whenever there is a month and you have a huge green month, oops, I didn't mean to run away with it. A huge green month, and what happens is that here is the top of the wick of the previous month, right? Here is the bottom of the wick of that month. So this is December of 2020, right? This is January of 21. This is February of 21. Now, if you don't remember, February 21 was the the moment that well, it wasn't really for Ethereum. It was more for Bitcoin, but it still had a huge effect on Ethereum. Was when Elon Musk announced that they were going to put reserves in Bitcoin. So, uh, it didn't really, as you can see in February, it didn't really have too much. But as you can see with January, January was a huge month for January 21 anyway, was a huge month for Ethereum. Now, what did that do? That created an imbalance, and that's what we look for when it comes to smart money ideas, smart money price action, things like that, because that's what the algorithm does. The algorithm goes towards those imbalances. I mean, yeah, you can have a huge takeoff right here, and everybody's going, oh, it's going parabolic. It's going parabolic. Guess what? It's going to come back down. I hate to tell you, but whenever you have something that does not balance, it's going to come back down and it's going to eventually balance itself out, right? Does it have to come all the way back down and fill this whole gap? No, it doesn't have to, right? That's kind of, I guess you could say, not really a rule, but just kind of an understanding about smart money, is that if you have a monthly, right? If you have a monthly like you did in January of 2021, to where you have this huge fair value gap in between December and February, that price is going to come back down to it. I could have told you that. I couldn't have told you when. There's no way in any possibility I could have told you when it was going to, but it had just so happened to do it this past month, and it looked like it did in June, and now July, it's finally making its way out. So, and what's funny is I actually had this whole area right here, as I put an area to watch, or watcher, an area to watch for reversal. That's where I had my area to watch. Why did I think that was going to be the area to watch for reverse? For one, you had your 2018 high here, right? Uh, that is not indicative of your what's the word I'm looking for? I always forget these words. I don't know why. But that is not your support. That's the word I'm looking for. That is not indicative of a support. Now, what that is indicative of is that it is an area that it's possibly going to come down, bounce off of on like a daily basis, something like that. Um, but more than likely, you're going to see it come back down into the body of the high, right? Of that month, of that previous high, you're probably going to see it come back down into the body, especially if that that month of January explodes up and past it, right? And it doesn't come back down to the body of it, and that's what these green, or sorry, not green, but that's what these gold markers are. These gold markers are the top of the body of that area, right? So that's technically what we would call a breaker, right? So that whole candle, that whole monthly candle, and we can even break it down even further if we wanted to, and get down to the weekly, get down to the daily, and find out exactly where that breaker was, and probably even break it down even further to see if there was any kind of imbalances in there. But we'll keep it simple for now. We'll just go with the monthly, um, and we'll just say we'll put a rectangle around that month, right? Draw it over and say, okay, in that area, and it would. That's probably where I would have watched for the reversal. I put it up here. I put it a little bit higher, um, only because I was thinking more it would be the wick, because in the weekly it's a little bit heavier on the body in the wick. Granted, I should have known, the larger the time frame, the more apt it is to come back to that area. So even if we go to the weekly, week, and we go back to that same kind of time frame, so you have this up here. And this is why I thought it was going to be the area to watch reversal would be, and I'm going to have to change colors here so we don't get so confused. And I'm going to change it right now just so I know. Let's go with red, because we know that red is kind of a no-no color, I guess. We'll go with red and purple. How about that? Okay. All right, so to me, that was the area to watch for the reversal, because that was the weekly, right? Top weekly, very high, the highest candle of that high, before it got broke in 2021. So that was 2018. It broke it in 2021, right? Uh, if you look at it on the monthly, you can see that it just flew past it, and it caused a large imbalance. To me, that tells me it's going to come back to that imbalance. Now, again, when is that imbalance going to happen? I don't know. But when it did happen, just now, it happened within the last couple months, right? So, if we take a look at this on the weekly, now we're getting down into what is currently happening, right? So, and these are daily fair value gaps that I already have drawn out, but it did get all the way back down to about what, 1,000, right? Uh, I think around 982.99. I think was the low that I recorded. Oh no, it was even lower than that. 879. That's right. So from the 879 to the current high, right, and that was back whenever it got that low. That was back in mid-June, right? Uh, so we got that low in mid-June, right? Pulls back up, pulls back down, right? Why does it do that? Probably because it hits a discount price. Now, what's a discount price? A discount price is when smart money sees that it got below the 62%. So I'm actually going to move this here really quick to the top of this high right here of the next week, right? Because that's what happened. What happened was it got to that low, right? Shot back up to this high, and then where'd it go down to? Boom. Actually went down to what price was that? What's that low? Low is 997, right? So it got down to 997 again after it pulled up and created a short high of 1275, somewhere around there. That 997 was just below that 61.8%. Now that is the discount price for those that are in smart money looking for to buy cheaper. That way they can load up on that cheap price and look at it. Boom. 3 weeks in a row. Just skyrocketing up and out of here. Now, on this past week, it did. We are still in the weekly, but you can see this big red weekly candle here, right? And before this big red weekly candle, you do have two equal lows, right? So with these two equal lows here, that is where the liquidity was previously, right? So that's where that big green line is. So it dropped below that. It dropped below that really quick. Everybody thought that that was probably going to be the support level. Ended up not being the support level at all. I mean, it dropped, bottomed out through it. But now that it's coming back up, what's probably going to happen, right, is it's probably going to act as some kind of ceiling for just a short moment. Why? Because of the daily fair value gaps and the weekly fair value gap that it has created. So those are the imbalances that it's looking to fill before moving on, right? So I could actually get rid of a couple of these dailies and we could throw in the weekly and see where it's at on the weekly. I know there's a lot of colors in here and you guys are wondering what in the world is going on. And that's because I also have the monthly in here and all that stuff. So whenever it comes to smart money, I don't use harmonics or bear flags, bull flags, any kind of stuff. I just use rectangles, right? Because it's going to show you an area of where price is going to want to go. That's all you need to know of price action, right? So here is your fair value gap. So here is your week of June 13th. This is the week of the fair value gap that we are currently in of June 6th. Prior to that, the week low of last week of May, right? So, as you can see, it got up to about maybe a little bit more than halfway before it starts making a little bit of a retraction, right? And I think that's just natural because it's got up into that fair value gap. It got up at least halfway into it. That's generally what we look for, about halfway into that fair value gap. And it did. It actually just got above that 68 or 61.8%. So just barely above that, starts, pulling back down for the week, right? And then once Monday starts, I have a feeling we're probably going to be somewhere down at this area right here at the bottom of this fair value gap, and boom, we're going to take off again. That's what I have a feeling is going to happen. So I'm going to go to the daily here. As you can see, we have been in the daily this past week. It's just been kind of sideways here. We had that one day on July 18th where it kind of took off, and ever since then, we've just been kind of sideways, right? I have a feeling it's going to drop below because if we do a fair value gap in between the 17th and the 19th, you can see that it did drop into there, but it didn't really fill that gap, right? It didn't really fill that fair value gap. So I have a feeling what's going to happen is that what we're going to see, we are going to see, where is the path? I think it's in this one. We're going to see it drop down into this fair value gap down in here, probably about down to 1380, 1375, something like that. Fill up this fair value gap here, probably make people think it's going to go short, and then as soon as it makes people think it's going to go short, probably even pull down to this 1295 area. That's where I have it going, because there is both a fair value gap on this side and on this side. So it didn't, it basically it ran down through here, and when it ran back up, it ran back up through that same area, and it hasn't balanced out in that area yet. So I have a feeling it's still going to come back down to around that area, somewhere in between, um, let's see, around 1290 and about 1315, somewhere in there. It's probably going to come back down to that area before it finally takes off, and boom, probably gets somewhere around to 1730, pulls back, and then gets above these current highs of around 200% where we're at, around 2080. That's what I think is going to happen with Ethereum. All right, just my personal opinion, just from what I've seen, and from the looks of the chart, the way I have read price action before, um, this looks like the most likely scenario. And like before, I think I did a video earlier in the week, I said it would probably rise up, fast before it fell back down into that area that I was talking about. And the reason I thought it would do that is because, well, let me see here if I can get the Fibonacci for it. Here we go. Yep, perfect. Hold on, let me see if I can get rid of some others here too. Perfect. Oh my God, it's just above that 50% mark. So there is a possibility that it could actually come above here. And if it does that, if it does come above here, then, well, I'm trying to see where it would be at if that area were to hit about 61%. Okay, perfect. It would be in perfect alignment with these current highs over here, with these highs over here that happened back in late May. So these highs that happen here, if it reached, oops, didn't mean to do that. I meant to grab this yellow one. If it reached all the way up here, right, and hit these equal highs, that would create what we would call manufactured liquidity, meaning that next time that it goes up to that area, people are going to think that it is going to automatically go down from that point. People would start shorting it, right? So it could pull back, go up to this area, and then pull back down to where I think it would go to around that, 1280, 1315 area, right? Before it starts going back up, and once it gets back up to this area, guess what's going to happen? A lot of people are going to start shorting it right here, right around that 2000 mark again, right? And as soon as they do start shorting it, it will short, but then smart money, boom, they're going to take it right back the other way, leaving everybody who thought that it was going to short in that area holding the bag, and it's going to take off. But they want to get a good price on it first, and that's why they want it to come back down here to about 1280, 1290, something like that. And also an area that is left in imbalance. So this is why I think it's going to be doing exactly that. Now, next up, yeah, I know the whole thing just changed, but next up, we're going to be looking at Mr. Bitcoin. All right. So, there we go. Second here. I know it's moving around. I kind of drew this up earlier because I saw somebody say sell. You said sell like right now, and I was like, why would you sell right now? It's actually it moved up into the fair value gap of the daily or the weekly, whichever it was. I think it was the daily. Let me go back to the daily. Yeah, the daily. So if you have the daily right here, it moves up into the daily fair value gap. Yeah, it might sell, but guess what? If you put a Fibonacci on that, onto here to here, boom, where's it going to go to? Discount price. Guess where the discount price is? Bullish order block right there. I mean, it can't get any more clear as day. Right there is the bullish order block. So, what is a bullish order block? That is your last bearish candle before a bullish candle comes up and it closes above it. Not only does it close above it, but it closes above that kind of area, almost the whole area that it was consolidating in. So boom, boom, two candles in a row, right? Whenever there's two candles in a row that close above, that is a huge bullish sign. So if somebody is going to say sell, okay. If you are going to sell, you can. That you have all the prerogative to do so. But what I'm telling you to do is to watch out for this area right here, because this is going to be the area that it might turn around that, or that it more than likely will turn around that and start going back up the other way. And that area is going to be 20,952. That's where I think is going to turn around and start going back up. Now, once it starts going back up, what's it going to do? It's going to fill the fair value gap of the daily, right? And once it fills the fair value gap of the daily, so I'm going to leave this here. And then also, we're going to draw this one here. And then what's it going to do? So there's two things it could do. It could either hit the top of this fair value gap, or it could actually reach up into the next fair value gap. Either one, not for sure. Either way, it's going to probably fall back down to, again, probably the same discounted area, which is going to be just outside, or probably going to be hitting just the bottom of the current fair value gap of the daily fair value gap that I have drawn here, right? This guy right here. That is your daily fair value gap. So it makes complete sense as to why it would want to fill that. That's what price does. It wants to fill the imbalances and it wants to look for liquidity. This, it does both, right? So here it fills up this imbalance coming up. Now it's filled it all the way up. It's got to make sure it fills it all the way back down as well. So pulls back. That's the pullback of it. Hits the discount price. Boom. Takes off again. So again, discount price here. Watch out for it around 20,800. And then watch for the fall somewhere around, or watch for it to run all the way up to about 26,500 to about 2,700, somewhere around there, or 26,800, and then make a pullback again into about the bottom of the fair value gap, the daily fair value gap here, right? So that would be about 23,300, 23,200, somewhere around in there. That makes sense, the 200, because those are the smart money levels. Smart money levels are anything that ends in a 0, 200, 500, 800, right? Don't ask me why. Those are just the smart money levels. That's what institutions look for. They look for it to go to those levels, and once they do, they will buy or sell to make it turn around and go the other way. And once it does hit those levels, it'll either drive through them or ricochet off them really, really fast. So for it to come back down to 23,200, that would make a whole lot of sense. Or 23,500, something like that. Well, 23,500 is way up here. Never mind. Well, hold on. 23,500 is just about the bottom. 23,400. 23. Yeah, it'd probably be more like 23.2. It'd be right where that fair value gap ends. So then, boom, it takes off again. And then we see it get to, okay, you see this right here. Here is where we have a whole lot of consolidation happening, right? So, highlighter, I'm just going to put it right over here. Look at all that consolidation that's happening. All right. So, what's going to happen once it gets up to that area, right? Again, you have a fair value gap, and just below that fair value gap, you have a lot of consolidation. So, boom, hits the top of that, falls back down to the discount again. Now, if it falls back down to this discount, it also happens to be about halfway between that daily fair value gap. That is what's called consequential encroachment, right? I would expect that to happen 100%. So that would be about 25, or sorry, hold on, let me look and see I got the right number. 25,000 even. And that makes perfect sense. For it to hit 25,000 even and then turn around and ricochet off with that makes complete sense, right? And then what it would do, more than like, instead of actually making this big run that I have here, it would probably hit the same number right here, probably around 28.5, somewhere around there, stall probably for just a little bit, and then after that, boom, it would make a run above these highs here. So it would probably next move after that, it would run above 32. That's what I think would happen with Bitcoin. All right. That's because, for one, it has to fill that fair value gap. It has to fill that imbalance. Then after it fills the imbalances that I'm showing you, then boom, it would be going toward the liquidity. As you can see, I have equal highs equals liquidity. It will be chasing after that next. That's what I think would happen. All right. And then last but not least, my favorite, your favorite, all of our favorite. Hold on, I'm going to move myself a little bit over here because I think I'm in the way a little bit. Monero. Yes, Monero. I love Monero. Just because it is the stealth coin. The one and only stealth coin. I'm trying to find. Whoa, there it is. I'm trying to move it out of the way. But I have it on the weekly right now. I'm going to spread it out here really quick. And as you can see, previously, Monero has had a huge run, right? Back in May of 21, right? Almost up to, almost $600, right? Right now, we are sitting at about, I think, 600 and something. But I have a lot of stuff wrote down right through here. I thought I deleted all this for some reason, but I guess I didn't. Okay, so I'm going to try to talk through this and see if I can't figure out where we're. So I was going week by week. Okay, July 10th. Let me go to the day really quick. That way I can try to find another week from there. That would be it right there, right? July 17th. Where is my calendar? just so I can be sure. I just want to be sure. 16th. Man, oh yeah, no, sorry. 17th, 24th. Okay, 17th, 24th. Those are the ones coming up. All right. So, 17th, right there. All right. And then we do vertical. No, it didn't do vertical. Still not doing vertical. Hold on one second. Okay, vertical, 17th. 24th. Okay. Now, here's what I thought was going to happen. I thought what was going to happen was that we had a break in these structures going down, right? Even though we did have a low, we did have a break in the structures going down. We were going up, and then all of a sudden it would pull back. I thought it was going to come back all the way back down to here before it took off again. And it didn't. It didn't actually. Um, Instead, it actually stood its ground and then continued. Well, it kind of consolidated a little bit, but then boom, it took off from here. So, whatever I thought was going to happen was completely off. Well, from what I had explained last time on here. However, I have been in these charts, and I have been placing my longs, and I will say I'm happy with where I'm at right now. Now, what I do want to do is I do want to get rid of some of these Fibonacci's, because this also looks like, Bitcoin, and it looks like uh, Ethereum as well, where it dipped down really, really fast, and now it's coming back up. Except for Bitcoin and Ethereum didn't have this. It didn't have this dip, come back up, and then drop again. It just fell, stopped, and then dropped. Both of them did. Uh, Monero kind of gave us a little bit of hope in between there, as to where Bitcoin and Ethereum didn't. So the question is that what is the next stop for Ethereum? Or sorry, not Ethereum, Monero. Uh, what I personally see, right, is, see right here, there I have to have these imbalances right here. It has actually filled those imbalances going up. Now we need to fill them going back down, and it did. Okay, so you have it filled it going up, filled it going down, filled it going up, filled it going down, filling it going way up. Now I think we're going to see quite a bit of a drop here. I think we're going to see quite a bit of a drop. I think we're going to see it come down to about 128. All right. So just be wary. Don't get your hopes up for Monero and to start popping off, because there is a fair value gap, the very, very large fair value gap in that area that it could fall back into. All right. Even though it did break, the liquidity. See, there was two highs right there that were rejection blocks that came up again, boom, and then it stopped, fell back just a little bit, and then boom, ran up after that. Now, I have a feeling that since it did kind of give like a false sense of support, like right there at that 132 mark, that's also where your uh, your fair value gap is. This is where you're going to see it start falling down from. I'm going to put a Fibonacci here. Okay. So, and look at that. Right at that liquidity level that I was talking about, just underneath that, guess where that is? 61.8. That is the discount price that smart money wants to go to. I'm telling you. Okay, so watch for 130, 131. All right, I think it's going to come back down to about that area. And then once it does come back down to about that area, after that, you should see it take off. And we should see it. Let me see here. I have a daily, weekly fair value gap imbalances right up in here, right? We should start to see it getting up towards the 200 price range, right? Um, I want to see it get above this recent high. Not really. I guess you should say recent, but happened back in June. Is right around $200. That's where I think we're going, right? Because there was two, almost two equal highs. Those two right there. But then again, you have two somewhat equal highs right here, right? And what's probably going to happen is that it'll probably come up, hit about a similar high, make you think that it's going to be bouncing off of that and going back down, and it probably will for a short amount of time before it turns around and comes back up, rips up the other way, and anybody that was selling short is going to be holding the bag. I'm telling you, and it's probably going to happen. Let me see here, right around where I would find what we would call the breaker. The breaker would be your last up candle before the next. So you have a low, high, lower, low scenario. So I see it here already. Didn't mean to move that. Come on now. So it would be this right here. No, yeah, there you go. There you go. Low, high, lower, low scenario. Right? Before it consolidates this way. And then you also have actually, kind of don't really have another low, high, low scenario. You do, but you don't. I mean, you have a low, high, lower, low, right? So you have a couple of those. After we see this run back up, as you can see, it's somewhere around 149. And where I'm talking about where this low, high, low scenario is somewhere around 190 something. So we still got about $50 more to go, which is quite some time, right? So, and I got a lot of dots and lines and stuff and all kinds of madness through here that I can probably get rid of. Because the only thing I need to look at is the current highs, or at least the somewhat equal highs, which would be those guys right there. You saw that. It said equal high. Okay, right there. Right there is your somewhat equal highs, right? And then so the price, again, could come back down to here. Once it does that, kicks back up. And then once it does kick back up, you can see all of this is balanced through here. Most of it is anyway, especially once it gets above here. So it's pulling back right here, consolidating right there, pulling back. It should come back up, probably hit equal high, maybe just pull back a little bit and then go on back up. Guess where the 162 is? The golden ratio is at the very, very bottom of a fair value gap. So it should probably hit that, if not even more. Again, maybe a slight pullback again. And then that's when you would see it come back up and see the at least getting close to the second golden ratio of 262, of hitting it right here, and then it would pull back, and that is where you get that low, high, lower, low scenario. So that last up candle would be your breaker. It shouldn't get any lower than that, the low of that candle. So it should hit that, and once it hits that, boom, back up the other way and getting above these highs that are right here. That's what I think is going to happen with Monero. It'll probably happen right within the next couple weeks, couple months. Not 100% sure, but just be careful of that pullback. Come up equal highs, pull back again, and then up to the 162 golden ratio, where you have a fair value gap. And then once it hits that fair value gap, it should probably do a small little consolidation somewhere around in there, and then make a run up, right? Get about equal with those highs right there, and then pull back down as if it was going to sell short, because people would think that right there would be the resistance, and then it would hit the uh, the breaker, and then is that, which is the low high lower low scenario, and you would hit the bottom of the last high candle, and then as soon as it hits the bottom of that, which I have marked out right here, somewhere around 197, boom, takes off, and then we should see it get above 200 at that point. Again, that should take a couple weeks for it to happen, but that's what I think is going to happen. So, again, that's enough for today, and thank you all for watching. And, well, wear your pants. How about that? Well, I thought I was going to do something, but it never really did do anything. So, hold on.